So James, this just broke just as I was getting ready to get online with you.
Yeah.
Global Payments is going to acquire WorldPay
Really?
for 24.25 billion, including that which includes 1.55 billion in tax assets. And
Wow.
WorldPay currently, of course, is owned by Fidelity and the private equity firm what is it, GTCR.
Right,
I always
right.
get those.
Yes.
And here's the thing: FIS is going to buy Global's issuer business for almost the same amount of money.
Wow. Okay, that's so interesting. Yeah, because FIS I know has been putting a lot more focus on the issuing side. So they're going to
Right.
buy Global's issuing side. Global is going to,
By FIS's acquiring side.
yeah. Wow. Okay. Wow,
Yeah.
very interesting. All right.
Very interesting,
This is
right?
a
So you
this is a
heard it
big
here
deal.
first.
Yeah. Wow, good
Uh,
stuff. Okay.
yeah, yeah. I was,
So,
I love,
I'm
like I said, I love it when things pop up immediately as I'm getting
yeah.
ready.
Well, I'm sure you'll
Okay.
have a lot more for us as that one progresses if
Oh
we learn
yeah, I'm
more
gonna
about it.
pursue it
But
faster, but I literally had 5 minutes to throw
yeah,
this
that's
on,
great. No,
something
that's
on for you.
wow.
So
That's definitely big news. I know I'm going to be looking into it after this for sure. So, all right, what's our
yeah,
next one?
I'll send you the press release, which I literally
Great.
just downloaded. So,
Awesome.
okay. In other news, a group of Republican congressmen are pressuring the Fed on its debit interchange caps. Specifically, remember the haircut, as I call it, the buzz cut that the Fed proposed? Um, it
Oh,
was
where it was going to be like for you mean the Durbin Amendment regulations, they were going to
yeah,
lower the cap to like 12
the
cents or something.
yeah, it was 14.4 cents
Okay, right, right.
from about a quarter, right?
Hmm.
So, a group of 14 lawmakers, including Representative French Hill, who is chairman of the House Financial Services Committee, so he's pretty important up there,
Right.
wrote a letter to Jay Powell saying the proposal would put smaller financial institutions at a quote significant disadvantage. No big news there, because they lack the efficiency and scale of the larger issuers.
Right.
And of course, the idea which happened with Durbin when Durbin was passed, it's going to result in banks increasing their account fees and minimum balances, and
Right.
maybe debit is,
They're gonna find other ways to get that money and it's gonna come
they're going to
directly
get
from the
that money
consumer.
somehow,
Right.
right?
Sure.
So, when the Fed under Durbin initially capped debit interchange fees, the idea was savings were going to flow to the consumer, which of course
They
never
did
happened,
not. Right.
right?
Right.
But here's why, when you first look at this, you go, okay, so it's a bunch of lawmakers. They're kind of upset about something. They're gonna, you know, send off a letter to the Fed, and that's all you're gonna hear about it. But
Yeah.
here's the thing: just last week, President Trump nominated Michelle Baumann to be vice chair of the Federal Reserve Board.
Hmm.
Now, Baumann is one of the newest governors. The Federal Reserve Board, besides setting monetary policy, it does regulations and all that kind of stuff, right?
Right. Right.
And the board is made up, I think, of 9 governors, and there's a chairman who's Jay Powell, and there's a vice chair, and the vice chair, among other duties, oversees the central bank's payment services.
Mm.
And Michelle Baumann, when they first proposed this haircut, was the only governor who voted no.
Mm. Interesting.
Yeah, and it's very rare for governors to vote no. Usually, by the time the staff gets a proposal to the Fed board, I mean, I've been watching this for
Yeah.
decades,
Yeah.
so
Right.
usually by the time they get something to the Fed board, it's it's a fait accompli. They just talk about it, so they add a few ancillary questions. So the fact that she wouldn't go along with it, and now she's going to be vice chair,
Right.
I think there's a good shot that this is
Interesting.
dead in the water.
Mm. Wow.
At least for the time being.
Okay. So I guess the big takeaway here to clarify for our audience would be under the Durbin Amendment, there was a 22 cent and 5 basis point cap on regulated debit transactions. and
For
the
the largest banks.
for the banks with over 10 billion in assets, right?
Right.
And so now there's been a proposal to reduce that cap further down to 14.4 cents. And you're saying that right now it seems less and less likely that that is going to come to fruition. It's probably going to stay the same.
It's probably going to stay the same. And
Okay.
just to add to that, that proposal's been floating around for 2 years now.
Right. Right.
So, you wonder anyway. I mean,
Right. Was it ever going to happen anyway? But now
is
it
it
seems
ever?
like there's more seems like now there's more momentum to actually officially kill it.
That's what I would say.
Yeah.
That's what
Okay.
I
All
would say.
right. Love it. What's our
Okay.
next one?
Next, Block got its hand slapped by the New York banking regulators.
Okay.
They have to pay a $40 million civil monetary penalty to New York to resolve claims brought by the state's financial services regulator over lax oversight of services.
Hmm.
Specifically, know your customer,
KYC and KYB.
KYC, anti-money laundering, bank secrecy, those kinds of things.
Sure.
Now, this isn't the first time that Block has been cited by regulators. In January, the company was slapped with a $55 million penalty in January, like
Right.
a few months ago, just before Trump
Wow.
took office.
So they're all at almost $100 million in fines year to date.
Yeah, and 55 million was issued by the CFPB, and that order, of all the things that have been, slapped, taken down from the CFPB, this isn't because the fine already went out.
Right, right.
And, they said Block's investigations of unauthorized transactions were, quote, woefully incomplete. One
Hmm.
of the things it would do is direct consumers who claimed unauthorized transactions to go to their banks and have them reverse the transaction. And then when the bank went to reverse the transaction, Block would refuse to do it.
Hmm.
Another thing they did is they had a telephone number for customer support that went to outer space. I mean, like nobody answered it,
Right,
or
right.
it would answer and there'd be nobody
Yeah,
there.
right.
So,
Hmm.
clearly they're going to have to pay, like you said, over 100 million.
95 million year to date, right? You said it's 55 and then
Yeah,
40. So,
right,
yeah.
right.
Well, it's very
Oh, wait,
interesting to
no, no, wait,
me,
excuse me. It's $55 million penalty, right?
right?
But it's also 120 million to the consumers that it did bad
Oh,
by.
okay. Almost like a class action type situation
Almost
or
like,
something.
right, exactly. So they have to
Interesting.
redress the consumers.
Wow. I mean,
So,
that's a lot of money even for Block. I mean, that's a ton,
yeah,
So it's very interesting to me too. I think ultimately like these companies like Stripe and Square or Block, it's like they've discovered that not completing extensive KYC, KYB is actually profitable,
right,
right? Because you reduce all this friction,
right.
and it makes a better kind of in general, it makes a better experience for integrated partners, things of that nature. But it's like the regulators are going to have to be the ones that come in and enforce and say, no, like it's not acceptable to do business this
Yeah,
way.
exactly. It's not, I mean, banks can't do that, so why should Block be able to do it? It's going to
Right.
come back and bite them in the butt.
Yeah.
And it took a few
Hmm.
years to do it and it wasn't a federal thing, it was a state thing
Right.
because Block is registered as a money transmitter in New York.
I see. Okay.
So that's how the New York regulators get into it.
But how does that relate to what we talked about last week where there was this, the CFPB was basically told,
Right.
"Hey, back off."
I thought you were going to ask me that question,
Yeah.
and it really doesn't do anything. I mean, the fine was already done.
Got it. But I guess what I'm
The,
saying is on a move forward basis though, are we saying
we're
this
not going to see
type
something. Yeah, I think it'd be less likely to see something like this going
I
forward.
see. Got it. So this was kind of like, Block kind of came in on the tail end of this. They got slapped with the fine, but now on a move forward, the CFEB has kind of been told, "Hey, chill out, stop going after these
Yeah,
organizations for this type of thing."
nobody's going to come looking. Block for all you know could do the same thing. If
And
it
it
was
wouldn't,
smart, it would be a little bit more
right?
um, polite, shall we say?
Or maybe it will start being a little more polite if they think there's going to be a change in, administration or
administrative.
strategy down the road, right?
Sure.
So, but yeah, that's really interesting. Okay, all right. So what's
But
our?
people get mad if they call, and I know I do get mad if I call a phone number and it's dead air.
Oh, of
I mean,
course, of course. There should
that
be
they have to do
there should be
something
minimum
about.
standards for consumer experiences, for
Exactly.
sure. So okay,
Exactly.
so that how many was
Okay.
that? Three? We got was I think we have a couple more, right?
That was two. No, that was one. That was two. Three. Oh, you're right. I'm sorry.
There we go. All right, number four.
Fourth. Okay, staying with debit, and this is this is a little thing,
Okay,
but it kind of jumped out at me yesterday. Um, it's curious. Let's put it that way.
okay,
Shazam. Shazam was the very first uh, shared ATM network
right.
in 1975.
Yeah,
Started in Iowa.
fairly small organization today relative to
Fairly small
others.
organization, but it has a merchant services
Yeah,
side.
you're right, right. Yeah, I know the
Well,
people at
it's
Shazam, so yeah.
so it sold that business to a company called NCMIC Finance Corporation.
Okay,
Also an Iowa company that was founded in 1946. Get this, to provide malpractice insurance to chiropractors.
so they've come a long way.
They've come a long way. These days, they still do a lot of insurance, but they also do, um, you know, other financial type products for
Right.
medical businesses. I see this as interesting because it shows the opportunities of the medical sector. A company like this, NCMIC, right,
Hmm.
sees opportunity to provide merchant services to medical offices.
Very interesting. So you're thinking that they're looking at this as a way that they can kind of, there's a synergy here where they have all these existing medical connections and they
Right?
can expand the merchant services portfolio into medical. I mean, did they say that with the announcement at all, or you're just
No,
that's an
no, it was
implied?
a. I'm postulating.
Got it.
It's just.
Yeah.
But the announcement was just a simple, hey, we're shedding this, and all of our merchant services people, salespeople are going to go over to this other company, and
Right.
we're going to focus on just being a debit network. And that focusing on being a debit network isn't so bad. It's because
Right.
they're small community banks. And, now that the Fed has clarified that, debit, the online use of debit and how that applies, you know,
Right.
there's a good business there for Shazam,
Sure.
you know?
Okay. Interesting.
So,
Yeah. Very interesting.
yeah,
Yeah.
I thought that was interesting.
Okay.
And just for ha-has, I have a couple of just going to do one because we've been going for a few minutes here, and
Sure.
I don't want to kill people with numbers.
Right.
You know how I can do that sometimes.
You love your
But
data.
I love my data. Convenience drives mobile wallet use and other fun facts is my headline for this.
Okay.
Okay, a recent article in payments.com said the convenience drives digital wallet use for more than half of consumers.
Okay.
Fundamental differences between consumers who seek to manage their spending and those who prioritize financial incentives.
Hmm.
On the other hand, credit cards use is more common among budget conscious consumers, but it's driven also by cash back and other rewards.
Hmm.
40% said they like the rewards.
Sure.
That's why they're doing it.
Interesting.
Now, online purchasing was a different matter. Although budget control remained a common theme, 14% said they liked the budget control aspect of using debit cards. A quarter pointed to the ease of tracking payments.
Hmm. Sure.
And of course, security was a very prominent factor in online transactions.
Right.
And digital wallets emerged as a strong contender for online convenience among the budget conscious, with 55% of users citing this reason for using a digital wallet.
Hmm.
Leaving their plastic use in the dust, so to
Right.
speak.
Right. Right.
Uh,
Wow.
yeah, I thought that was very interesting. And next week, I'm going to treat everybody to uh, just a little teaser. WorldPay, which we already talked about
Hmm.
once,
Right.
They do a yearly global payment study,
Right. Sure.
and they were in Washington last week educating lawmakers on payments,
Oh, wow.
and they
Okay.
had their latest payments tome, and I've pulled some of those numbers out, and I want to
Great.
share that with people. But
We'll
I
do that
think we
next
have a
week.
lot. We have a lot
Yeah.
this week.
I love it. Well,
Yeah.
Patty, thanks so much for all the work you do to put all this research together. Everybody, this is Today in Payments. Head over to todayinpayments.com to learn more and follow up with this and see these stories, share these stories on social media, etc. Patty, again, thanks so much for all your work on this. Really appreciate it.
Sure thing, James. Thank you.